The focus of this lesson is employee benefits. Example 1. Marina is the director of the Washington Performing Arts Center. Her employer offers a pension. Marina's employer uses a formula to calculate the pension. Marina is planning on retiring at the end of this year after 25 years of employment. A retiree employee receives 1.5% of his or her average salary for the last 5 years of employment, multiplied by the number of years worked. Marina would receive this amount until her death. Her salaries for the last 5 years are $88,900, $92,000, $96,000, $98,000, and $102,000. Calculate Marina's pension. The first thing we need to do is determine the average salary over the last 5 years. So we are going to combine each of those numbers. So 88,900 plus 92,000 plus 96,000 plus 98,000 plus 102,000 divided by the 5 years to get the average. That gives us 476,900 divided by 5, or $95,380 on average. Now, according to the problem, we know that she gets 1.5% of this average salary over the last 5 years. To find 1.5% of it, we're going to take the average salary, that $95,380, and we're going to multiply it by the decimal version of 1.5%. So we have here 0.015 times 95,380, which comes out $1,430.70. We also see that it says in the problem that this formula will also multiply that value by the number of years worked. So we're going to take this $1,430.70 and multiply it by the 25 years that she worked for the company, giving us $35,767.50. So Marina's pension will be that amount, $35,767.50 per year from the moment she retires until she passes. Now it's your turn to try. Try this. D. Brown Corporation offers employees a retirement plan based on the following formula. The retiree will get 2% of the average of the final 3 years' salaries times the number of years employed by the company. Suppose an employee's last 3 years of salaries are A, B, and C, and the employee worked at D. Brown for D years. Write an algebraic expression that represents the employee's yearly pension. Use the equation tools to write it correctly. Example 2. In Reese's state, the weekly unemployment compensation is 60% of the 26-week average for the 2 highest salaried quarters. A quarter is 3 consecutive months. There are 4 quarters in a year. For July, August, September, he earned a total of $9,024. In October, November, and December, he earned a total of $9,800. Those were the 2 highest quarters for him. Determine Reese's unemployment compensation. All right, so the first thing we need to do is determine this 26-week average. So we know that for 13 weeks, July, August, and September, he earned $9,024. And for another 13 weeks, October, November, December, he earned $9,800. So to get the 26-week average, we're going to add the first 13 weeks, the second 13 weeks, for a total of 26 weeks worth of salary. So we have $9,024 plus $9,800 divided by 26, which gives us $18,824 divided by 26 weeks. We can then see, on average, he was earning $724 a week. Now, he does not get all of that with his unemployment compensation. The government has agreed to give him 60% of this. So 60% of the 26-week average, or 60% of 724, is going to be $434.40. So Reese will receive $434.40 per week for up to 26 weeks. If he does manage to find a job before the 26 weeks are up, He will stop receiving unemployment compensation. If he does not find a job within the 26 weeks, the 27th week, he will not receive the pay. All right, now it's your turn to try. Try this. Wanda lives in the same state as Reese. Her weekly unemployment compensation is $360. What were the total 26-week earnings for her highest consecutive quarters of unemployment? Be really careful here. You're going to have to work backwards. Give it a try.